The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. It's Bobby Rains here again for our normally once every 3 week members-only workshops. We had some issues with the last one and didn't do it, but we're here. It's December 5th, so we're here for the members-only workshop. Just to go over the normal structure of these, we're going to do our regular market update. I don't think there's a whole lot new going on at Investors Observer, but I might think of something. And then the rest of the content, the rest of the hour is questions, site demonstrations, etc., from you guys. So if you have any questions, put them in the box there. Member Success Coordinator Rob Silverman is also on the line. He can help you out with some of those, and then I'll answer as many as we have time for, or go until the questions run out, whichever comes first. And yeah, if you have questions you'd like to submit ahead of time, if it's something you'd like to see on slides or whatever, just send it in ahead of time. Mention, hey, this might be a good thing to do at a workshop, and we can do that. Let's see here. All right, that should fix the no video problem. And then let's go back to, yeah. All right, so let's talk about market update. That's our first thing. So here's the last year of the S&P 500. You can see we topped out in January and then again in late September. And here's the big sell-off at the beginning of October, and then there is yesterday's nightmare. So I tried to highlight a couple of support and resistance levels. 2760 on the way back up happens to line up with the 200-day moving average. And then the 50-day is starting to sort of converge to that level as well. So that will be an interesting battle when markets reopen and we start to go back up from there. And then 2800 has been a line. I mean, you can see after we sold off at the beginning of the year, 2800 was sort of a battle a couple of times, and then we actually used it as support a few times as well. So that'll be another interesting thing to look at on the way back up. And then the recent lows are here at 2640 or so. And then you can see there was a little bit of, the ends of these candles for a lot of times we look at, there's a gap back in December of last year, even at that level. And then 25.8 were the, was about the lows here. You could go up or down a little bit from there, but that's kind of what we're looking at there. And I try to zoom in here a little bit and do the last 6 months, just to give you an idea of, like how closely that 200-day has been along. It's been relatively flat. You really prefer to hit moving averages when they're sloping up than sloping down. And you like to see them cross over each other, going in the other direction also. But yeah, that was a big move yesterday, and we'll talk about the fundamental reasons for that in a few minutes. But yeah, it's going to be an interesting battle when the market opens again. Futures trading, when futures were trading, was up about 0.5%, which is not nothing, but after you lose more than 3%, it's not a whole lot either. So there's the S&P 500, and then I thought this was interesting, the NASDAQ versus the Dow over the last year. The NASDAQ's in white and the Dow is in blue. You can see, so here's the January peak and sell-off, and the NASDAQ came right back and set a number of new highs, and the Dow kind of lagged. But if we go to the last 6 months, you can see the Dow has kind of emerged as a leader, even before the sell-off in October, which is what this is. But I mean, and so some of this is, right, the FANG stocks and some other momentum names happen to mostly be in the NASDAQ and not, I guess, Apple's in the Dow, but your Netflixes and things like that certainly aren't in the Dow. And so that's part of this. The Dow has a lot more trade. more interest rate sensitivity, all of those things. Although you'll notice, right, like if this big sell-off was interest rates, the Dow didn't actually lose as much as the Nasdaq did. So that's kind of interesting. But then, the Dow is a weird index. It's also got some sort of flight to safety kind of stuff in it. So some things lose a lot and some things gain a lot because people rotate things. So it's harder to look at. But yeah, the Nasdaq has really been the momentum index this year in terms of both leading on the way up and unfortunately, taking the big losses on the way down. All right, so my animation's got a little messed up here. But yeah, what else is going on? We had a good day Monday on the China trade deal. And, we had some kind of preliminary reports on Monday and over the weekend, and everybody was waiting for the rest of the details. But, the details either didn't materialize or came in sort of worse than expected. Kudlow came out Monday and said 90 days from January 1. And then the White House was like, no, actually, it's 90 days from yesterday, 90 days from the 1st of December. So that's right, two very different things there. There were some mixed messages from the White House about who was leading the negotiations. There was a Trump tweet about China dropping their auto import tariff, and then it came out that, well, yeah, that's a goal of the negotiation, not actually a thing that's happening. And so, yeah, a lot of things were walked back, and then a lot of additional clarity we thought we were going to get just never came, right? So all the there's some statements and tweets about China buying more agricultural and energy products. And we got a little clarity on that today. It seems like they were talking about soybeans and liquefied natural gas, but buying more than zero is a pretty big range. Are they going to go back to what they were buying previously, or are they going to buy some? We have no idea. Nobody has confirmed it. And so, the market, I think, felt a little bit lied to. But all of that stuff came out sort of before the heavy selling started yesterday. So is that 100% of it? I don't know. I think the market was in a bad mood, certainly, because of that. But I've seen 17 different explanations for why that selling started right before noon yesterday. And I don't know that any of them are more right or wrong than any of the others. Housing data has been weak was actually a bullet from the late October webinar we did. The most recent piece of this is Toll Brothers reported falling orders earlier this week. Part of that is interest rates. Although interest rates, Powell came out last week and said we were just below the range that could be considered neutral, which everybody saw as a walk back from his early October statement of being some distance from neutral. You can parse that a whole bunch of ways, but this seems to be the way the market and people who watch the market have interpreted it. And we've seen, I couldn't find a good chart of the 10-year yield, but 10-year yields now are lower than they were in October when the selling started. So if you think all the bullishness is, we can go back and look at this slide. Yeah, so if we went from here to here based on rising bond yields are back to where they were, and we're still way down here. So I don't 100% buy that that's all of what's going on. The yield curve inversion, the 3-5 spread, which is the difference in interest rates between the 3-year and the 5-year, inverted earlier this week, and the 2-10, which is the one that everybody kind of thinks is the recession indicator, isn't there yet, but it's close. But the thing about that is it is maybe a recession indicator, but it doesn't tell you anything about the depth of the recession or the timing of the recession. I feel like the yield curve inverted relatively early in 2017, and it was quite a while after that we had any the first sort of rumblings of the housing crisis sort of started there, but we didn't really hit recession until 2018. So it's an indicator, but we could still certainly go up in the stock market from here. The economy, I mean, the outside of some softness in housing, most of the economic data is pretty good. Unemployment continues to fall, wages continue to rise, albeit relatively slowly. The manufacturing data is where you'd like to see it. The inflation data is where you'd like to see it. All those things look pretty good. And then there's some weird stuff going on with politics in Europe. We're starting to get into nitty-gritty time on Brexit, so that's getting contentious. We've had riots in France, which haven't been I don't know what the financial implications of those are, but certainly in a parliamentary system, the government can turn over a little faster than it does in our system of government. And then Italy is still sort of battling out with some populists in terms of what their budget is going to be. And so you get a lot of, there's just a lot going on that makes people nervous. So it was interesting to me that last week was one of the biggest, I forget exactly what the statistic was, but it was one of the biggest up weeks the market has had in years. And even while the market was rallying, the VIX didn't give a whole lot back, which, again, right, like some of this yield curve stuff, it means something every time it's meaningful, and then sometimes you can just ignore it. Right, the VIX usually goes up when there's a big sell-off and goes down when there's a big rally. There was a big rally and it didn't go down as much as you would have expected, so that felt meaningful, but what the meaning is really hard to tell. I just don't have a good sense of what that means, and so we'll see. I mean, I would kind of expect the market to bounce a little bit on Thursday. Just the dead cat bounce from Tuesday, for lack of anything else. But where we go from there, I don't really know. It's a pretty interesting time right now. You'd hope to see some kind of a Santa Claus rally emerge, as we get into December. Traditionally, there has been some upward drift, I think largely just due to active traders sort of taking off and automatic deposits from people's retirement accounts flowing in. That's what a lot of those things are. Was when volume gets low, sometimes things just drift higher because of that. But we'll see. It'll be interesting to see where we end up as we head into the year. So that is that's everything I had prepared. And we didn't really get any. We didn't actually get any ahead of time questions. So any questions that people have, go ahead and put them in the box, and we'll get those answered as best we can. So we do have a few portfolio trades open. We haven't really opened a lot of trades in portfolios or full swing stocks recently. You have one of the biggest up weeks in years and then one of the biggest down days ever on a points basis anyway. It doesn't seem like a great time to be putting trades out. We're watching Square. We were looking at closing it Monday afternoon, and then yesterday didn't really. It's not at a point where we would close it now. It's really about finding a graceful exit. It seems, the market's going to have to really rally back for Square to recover. Square was one of the. I can go back to my slides and we can look at the NASDAQ again, but Square was one of the big winners in this period and one of the big losers in this period. So that's kind of what happened. We try not to chase things too much, but you have to play what's working. And so if we can get a rally into the end of the year, we shouldn't end up with that as our loss. It was like $6 or $7 to get out the other day when we were looking at it, and I thought, well, let's hold it into Tuesday morning and see what happens. And then Tuesday happened, and I don't see the need to get out now. We've got until January. So we're looking at that. We're also watching the Navistar and Dave & Buster's trades. I mean, we're watching all these. We're looking for new opportunities, but it's really, yeah. I mean, last week you would have hated to be short, and this week you hate to be long. So it's a, yeah. We're as unhappy about it as anybody else is that we're not putting out more trades. But it just doesn't seem like the way to go right now. And yeah, Square, we're gonna update. Try to do something on as soon as it seems like the right time, but we're not quite there yet. All right, so Dave has a question. Any thoughts about using a collar on a covered call stock that still has strong buy recommendations but is down considerably? So yeah, Dave, we actually used some collars on some things earlier this year, Square included. Square's diagonal spread, but the principle is the same. But what we did was we did it through earnings. So we sold a call, we sold a call and then bought a put. Tried to do it at about parity. I didn't want to put a bunch of money into buying a put. So I tried to sell an out of the money call and buy an out of the money put. The issue there is, right, so like I wanted to do it during earnings because I thought, hey, there's a chance the stock could really move here. And I really didn't want it to move hard against me. So you buy the put, it's a short. As the stock falls, the put should gain value. And you should either be able to offset the majority of any kind of a loss with a collar, or potentially one of the things. I mean, one of the things we did with Square was we sold the put, made a little bit on it, but we sold the put and then kept the stock, hoping that kept the long call in this case, hoping it would go back up. That hasn't worked out, but yeah. So what you have there is you have a covered call and then you have a long put, and so buying the put adds to your net debit. And if there's not something like earnings coming up, then all the put is really doing is adding to your net debit and then bleeding time value, or the stock is going down. So for something like a trade around earnings, I kind of like the collar, because there's a lot of uncertainty there and the stock could move sharply in either direction. I'm still not sold on the collar as a strategy just for as a hold, because it's a very and I mean, depending on how you're doing it, you could structure in a way where your put is pretty far out of the money. But yeah, I mean, if the stock is just, and I haven't looked at Weight Watchers recently, I guess I should maybe go do that. But if the stock is just bleeding, if the stock is just bleeding price, then you're probably better off not holding the stock. Yeah, so if I had to guess, this was earnings. So if you'd, collared it up here before earnings, and then you got this big downward move, right? You could probably at least sell your put, and you'd be, closer to break even down here than you actually are. But in terms of just selling a put and holding it, if you get this sort of long, slow decline, you're not really making any money on your put. And you're still losing the value of your stock. So I don't really like the collar strategy in terms of a long-term thing. I do, I am coming around on it. We did it a couple times to get some positions through earnings, and in some cases they worked out, and in some cases they really didn't. But yeah, if there's something like that happening, and the other side of that is if you're buying options after expiration, if you're on one side of expiration, you're buying options on the other side of, or not expiration, earnings, you're paying a little extra in premium, which, if you can offset with that with selling a call, and if you sell an out of the money call, so you leave some room for the stock to go up, I think that's probably a trade worth making. But for something where you're looking at it just being in a sort of long, slow decline like this, right, your put's bleeding time value and your stock is also bleeding out, and depending on how exactly which put you sell, your put may be losing time value faster than the stock is going down to it. So I'm not super sold on that as a strategy. Weight Watchers, the best thing I can say with something that looks like this is if you really like it and you want to keep holding it, keep selling out of the money calls against it. You can look further out in time if you want. We have the out of the money call calculator. And so you can put in a relatively, I don't know if it'll, well, that's been cut in half since June. So you're probably not going to find a call that's going to get you back to break even there. But you can certainly use the, like, it won't do 71.50. Yeah, so that's, you probably don't want to sell a 2-year call. But if you looked at like the income generation option, this has a 29% chance of being assigned. And you can do, you get a couple 245s, 250s. You start to make some, take some whacks at that loss in any case. But yeah, it's hard to make month and week long option trades and lean on the buy and sell recommendations because one, analysts sort of reserve the right to change those at any moment, and two, a 12-month time horizon based on something like a discounted cash flow model and where earnings, price to earnings ratios have been historically is very different from what's the stock price going to be in 3 weeks. So that's it. Yeah, we provide some analyst recommendations in terms of average recommendation and things like that. I think it's good context, but it's hard to know how a short-term option trade will work out based on what some analysts think the stock price will be a year from now. All right, so Alan says, can we discuss the trade idea generator daily? I don't know 100% what you're asking about there, Alan. It is updated. Like, we do have new trades every day. Certainly these trades, the we call these personalized trades, and the feature trades are also updated daily. And so, yeah, these are new every day. All the trades are new every day. We try to put these names in a little bit of a timeout so you don't see the same stock showing up there every day. But yeah, if you had a more specific question, I'd be happy to answer it. Bob says, please explain what the inverse 220 is. So, Bob, I think you actually mean the 210. And so that is simply if you look at the yield on the 2-year bond and compare it to the yield on the 10-year bond, the typically longer bonds have a higher yield, right? It's risk premium. There's some loss of optionality once you lock up money for a certain amount of time. All those things. So typically a shorter debt instrument will have a lower yield than a longer debt instrument. And so when the yield curve inverts, and the points that people tend to like to look at is the 2-year yield, the yield on 2-year treasuries being higher than the yield on the 10-year treasury. And so that's what that is. And so when you talk about an inverse 210, it's essentially that inverted 2-year yield versus the 10-year inverting. And I don't That hasn't actually inverted. It's gotten to be pretty flat. I think it was the 3-5 spread and maybe even the 2-5 spread inverted, but the 210 hasn't gotten there yet. So John, there's not a way to review past suggestions in personalized trades. Yeah, I mean today's are what we have today, and there's a bunch of reasons for that. Mostly because yesterday's suggestions are probably not so good today, just because all the prices are different. So that's the major reason for that. Covered call, yeah. So that covered call repair tool is open to everybody who has a trade idea generator subscription, John. Yeah, it lives right here on any individual stock page or ETF. You can go there and find that, and it does either position repair or income generation. And you can use it if you have a diagonal spread and you wanted to use it. Simply add your net debit to the strike price of the call that you bought, and that should give you a decent number there. The one thing you will want to look out for is you don't want to sell a call that expires after your bought call expires. So you kind of have to watch that on your own. And some of you, I see some names here that are currently involved in our beta test program. So we are working on a portfolio tracker, and we're hoping to add these tools, this tool in particular, and maybe a couple others to that, so we can try to have repairs for more option strategies, and it'll just pull in your cost basis from the portfolio tracker instead of you having to enter it every time you want to use the tool. So stock score report is a separate subscription, John. The number is here for anybody who's a TIG subscriber. It also shows up if you search for covered calls. You can search, or, if you search for any strategy, you can get the stock score report there. The full stock score report is, I know the marketing department gave access to, I think, elite subscribers. I don't honestly remember which other subscription levels also have access to the full stock score report product, but you can look up the top level score for any stock in the trade idea generator, and also use that to sort and search by. So Mark, I believe we do still have the percent return on, annualized return rate is still available on option trades. I'm not sure exactly, what you're looking for where it isn't, where it doesn't exist, but it's definitely still there in the trade idea generator. And yeah, like for feature trades, you can just click through to the page and see it. Here. All right, yeah. If there's more questions, I usually block off the whole hour for these things, but if there's no more questions, we can go ahead and sign off. Rick, I don't actually remember off the top of my head. I don't remember if it was a promotion or not. I'm not so much on the marketing side of things. If you want to send us a ticket through the help button, we can look into that. I honestly just don't remember what the answer to that is, or Rob might know. He can chime in there.
Yeah, we were offering the stock score report as a promotion for people who were signing up for elite options, I think during and prior to Black Friday. But if you do want to submit a ticket, like Bobby was saying, we can look into what's going on with your account. Absolutely.
John, I'm not sure what exactly you mean by to find all assets of the service. Generally, you can look at this menu. I'm told that these three horizontal lines that are pretty much the universal standard for menu are what designers call a hamburger menu. And you can open that up and see, probably if you have more than one subscription or you have the elite service, you can hit the dashboard, and that has links to all the various pieces, and then, trade idea generator, portfolios, investors keyhole, morning action, full swing stock score report. Those will be there as you are subscribed to them. Otherwise, they'll be down here under options memberships. I have an account here where I don't have an elite membership, but I have all the various component memberships. So your version of this menu will look a little bit different, but everything that you have access to will be up here, and then under options memberships will be things that you're not subscribed to. So in the how to use the service category, you can go to the video guide, and there are so we have some videos about the different products. Elite has a bunch of videos, and we kind of took so a lot of these will reuse the same video in terms of what exactly is going on. The option strategies are relatively the same across things, but we have all of these in here, and so you can look and see what's going on in terms of that. All right, so it doesn't seem like there are any more questions. I can go ahead and sign off here. We'll put a recording and a copy of these slides up tomorrow and email it out to everybody. If you have questions between now and the next workshop, feel free to send them in on the help button. You don't have to wait for these workshops to get your questions answered. If it's something you'd like us to put together some slides and talk about in some detail, we're happy to do that. Just mention hey, this would be a cool thing for you to talk about in the webinar. And I enjoy doing those. Let me just let me know and we'll put that together for you. Otherwise, enjoy the rest of your day, and we will talk to you. I believe we decided to schedule the next webinar. I don't have a calendar in front of me. I believe the next webinar will be somewhere around the first week of January because we didn't want to have one the week of Christmas. But be on the lookout.
Yeah, we have it scheduled.
Go ahead, Rob.
Sorry, Bobby. We have it scheduled for January the 2nd, which is a Wednesday.
Okay, there you go. So first day back at work after the New Year's holiday. We'll get you a webinar there, and then yeah, in the meantime, hit us up with any questions you have. Thank you all for coming.